All right, so we've seen a seesaw market here the past few days, and today we kind of gave it back, and especially at the very top of the market, the mega cap names, technology names, semiconductor names, those were the ones that had the biggest losses today. You also had some pretty decent losses in IWM, so it was relatively broad. It was narrow on one end and pretty broad at the bottom end, and the middle did okay, right? The equal weighted S&P actually outperformed. So it was an interesting market. I'm going to break down the red flags that are showing up, the signs today in particular that suggest that we might be close to an intermediate top. Not like, we're not going to tank 50% tomorrow, but we might be close to an intermediate top. So let's go ahead and get started with our preview video tonight. Today is Thursday, November the 6th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. Before we get going too far, click this link right here. That takes you to our market outlook post for today. It's free for all of our basic subscribers at marketscholars.com. You can check out a lot more information. It's very detailed. Again, all you have to do is subscribe for free. When you click that link, it will take you to this page. This is what it looks like. And all you have to do, if you're already subscribed, just hit this login here button, and that will take you there. If you're not subscribed, click this join free button. It takes you to our basic page. This link right here also takes you to this basic subscription page. Scroll down to the, or click this link to the bottom, fill out that form, hit sign up, and boom, you're there, and you get, again, access to the full blog post, right? Market Outlook. And if you need, when you just go into Market Scholars, it's under Market Outlook Live Video Archives. This is what that looks like. All of our videos are all posted there. You get access to all of that. Here's the kicker. If you do this today for the sign up for basic, it only takes a few seconds to fill that out. If you do this today, you will get access to tomorrow's blog post that will have the full Market Outlook video on it. So not just the 5-minute preview, but the full 30-minute Market Outlook that I do for all of our subscribers. So on Fridays, our basic subscribers get access to the full video, all right, as well as the blog post that as well. But so you're going to want to sign up today for that basic, so you get tomorrow's video as well as every Friday's video, and as well as the blog posts every single day. So check that out there. Let's go ahead now and take a look at what happened here today. You can see the S&P dropped down, had a 1% decline. It produced a bull tag on the market forecast chart. There's a few other red flags in the full version of the video. I kind of break down some of the red flags that suggest the potential, including all the Hindenburg omens that everybody's been talking about lately, with all the breadth, right? A lot of red flags, and one of them actually is this here. And bring up the what I want to do is bring up a ratio chart here. So let me bring up a ratio chart, and then I'm going to pull up SPY relative to RSP. So this is the market cap weighted S&P 500 with the equal weighted, and you can see, like, for the first time since we kind of went a little parabolic here, we've broken that 8-day. Now we're not breaking down hard, we're not breaking below, but see, this was like one of the highest PPOs that we've had. The long-term PPOs at a decent level. We had a really high CCI, so we kind of had a little mini pop up to this 3.65. This is all-time highs for this ratio chart. And when you go parabolic and you break that 8-day, it doesn't necessarily mean we're tanking, but it does usually mean that the top is in. And this correlation is 88% positively correlated with the S&P. So does that mean that the top is in for the S&P 500? That's a possibility. Another thing too is the fact that our breadth has been so bad for so long. That's the reason why we've been getting so many Hindenburg omen signals, where the new highs and the new lows are both above a certain threshold, and as well as having a negative McClellan oscillator and a 50-day positive rate of change. We've been positive still over the last 50 days. But the summation index on the McClellan oscillator is almost below zero. So when you look at that and the fact that the number of stocks above their 50-day moving average are dropping below 200, closing below 200 again today after this tremendous divergence here, both of those are kind of a little bit of a red flag that something like the top might be in here. we might be headed towards a more of a decline. One other ratio that I showed in the market outlook preview is technology relative to energy. That's an important ratio. It broke its 30-day. But what I want to do here, the sector, the industry within technology, it's the most important one, is semiconductors. And it broke down. You can see below its 17-day moving average for the first time since it went parabolic. You got this divergence showing up here with higher highs and lower highs. On the PPO, you can see the long-term PPO is at a really high level. So we've had a really good run. So you can see right there, it's a pretty decently high level. We've had a good run. It's way above the 200-day. I know there's a potential. You can see this ratio is 87% correlated with the S&P. Those are some signs that things are breaking down. One other sign that I expounded on a little bit, and I'll just kind of briefly show you here, is the fact that the VIX jumped up. Now, the one positive sign is the VVIX didn't jump up too high. It actually stayed well below 110. Their correlation is back above 75%. But the nice thing, even though the VIX is at 20 and it's right at a little bit above its 200-day moving average, looks like a lot scarier. But when you look at that VVIX, that softens the blow a little bit. And when you look at this, like we're barely above 90% relative to the VIX 3M, much less at 95 or 100, which is probably where we should be, being this close to 20. So the fact that we're not above 95 yet, that we're a lot closer to 90, is a really good sign that there's that we're definitely not in the most worst case scenario right now. All right. The other thing too, one of the main intermarket relationships that impacted stocks today was bond yields. So bond yields had been rising pretty rapidly. Here, let's get the 10-year yield up. Had been rising pretty rapidly. Well, that didn't happen today. Today we're still above the 50-day, and we're still at 8 and 17 are closing above or crossing above the 30. So we're not like the trend hasn't changed back down to the downside. But if it does. It seems like that has been bullish in the past when yields have broken below 4% and moved lower. But as I showed you in previous videos, if we get closer to that 3.5% on yields and we do actually roll over and we have a little bit of a fake out here on the 50-day and we get down the lower lows as you would expect, I think that would more than likely have negative consequences on the S&P 500 rather than the positive that we've seen lately, in anticipation of the rate cuts. Because right now, we will probably most likely get one more rate cut in 2025, but the rate cuts are off the table, at least for early 2026. And even with the drop here, that might bring them back. And the last thing right now is we need is a drop below 3.5 towards 3% and beyond. Because again, that kind of means that things are breaking down from an economic standpoint in the macro level. So let's kind of see what happens with 10-year yields tomorrow going into next week. And like I said, I spent a lot more time on that relationship, in the full version of the Market Outlook video tonight. All right, so that does it for our Market Outlook preview. If you want access to the full version of a Market Outlook video every day and not just on Fridays, click this link right here. That will subscribe you to our foundation tier, which is our base level tier. After the basic's free. Then the next level up is our foundation, $29 a month or just $1.40 per video. But you get access to all of our market outlooks every single day, the full version, including the trades we do. And on tomorrow, when you get access for free to the video, you'll also get the trade idea tomorrow. But the foundation members get the trade idea before the market closes during our Market Outlook live session. So you get access to that every day at 3:30 Eastern Time on our website. You also get access to our Market Outlook live trade tracker, where we track the results of these trades. Because during the live video, we not only put a new trade on every day, but we also manage the old trades, which is the most important part of the trade, right? Is managing and closing it eventually. So we also manage and close the trades during that slide, and we track the results of all those trades. Our foundation members get access to all of that, again, for just $29 a month. So thank you very much for watching. Subscribe to our YouTube channel down here. Click the thumbs up icon. Comment on the video. Follow me on Twitter at DavidSettle42 for more content between the videos. Have a great rest of your Thursday night, everybody, and we'll see you all tomorrow.